If you are currently leasing a car, this video could potentially put thousands of dollars back in your pocket. You see so many people lease cars, and when that lease term comes to an end, they just simply return that car back to the dealership. And ladies and gentlemen, that is one of the biggest mistakes that you can make when it comes to car leasing, because you could have positive equity in your lease, and that positive equity could be thousands of dollars in value. Now in this video, I'm gonna show you how you can determine whether or not you have positive equity in your lease. And if you do have positive equity in your lease, I'm gonna give you 5 different options that you could exercise to put thousands of dollars back in your pocket. So if that sounds good to you, give this video a like and be sure to follow me or subscribe to my channel. All right, so let's actually start off talking about how you can determine whether or not you actually have positive equity in your lease. And for this example, we're gonna use this Toyota Tundra lease right here. You can lease this Toyota Tundra for $469 a month. It's a 36-month lease with about $4,000 due at signing. Now, if you look at the fine print, you'll see that this Toyota Tundra has a lease-end purchase amount or a purchase option of $40,363. So that means that at the end of this lease term, at the end of the 36 months, I can buy this truck for $40,363 plus tax. All right, let's draw up a hypothetical situation. Let's say that I leased this Toyota Tundra today, and we are now 35 or 36 months into the future, and I need to decide what to do with my lease. Should I buy my Toyota Tundra, or should I simply turn it back into the dealership? So by reading the fine print, I know that I can buy this Toyota Tundra for $40,363. Now, what I'm going to do before I turn this car back in, or this truck, excuse me, back into the dealership, is I'm gonna see what Toyota Tundras, the same trim, the same year, are selling for on the open market. Now, if this particular truck is selling for $47,000, all across the country with the same amount of mileage, I know that I have roughly $7,000 of equity in this truck, so it does not make sense for me to turn this truck back in, because I'd be losing $7,000 and I'd be putting that $7,000 into the dealership's pocket, not mine. Now, on the contrary, I see that trucks similar to mine are selling for $35,000. I know that it does not make sense for me to buy this truck or exercise my right to buy this truck for $40,363, because then I would just be walking into about $5,000 of negative equity, and that's a bad financial decision. And just for your knowledge, this $40,363 is the residual value. It's what the manufacturer estimates this truck is going to be worth at the end of 3 years. And when you add your outstanding monthly lease payments to this amount, that is your lease buyout amount. So as an example, let's say I have 2 remaining lease payments on this truck, and my monthly payment is $500, $469 plus 10%. That means that my lease buyout amount, I'm just gonna add $1,000 to this amount, would be $41,363. So if you're in a situation where you have positive equity in your car lease at the end of the lease term, you have 5 different options, and I'm gonna talk about them in this section of the video. Option 1 would be to buy the car and then drive it around for another year or 2 or 3, whatever you feel comfortable with, and then you can turn around and sell it in 2 or 3 years. Or if you want, it's a Toyota Tundra, you can run this thing to the ground. Maybe you want to keep it for 10, 15, or 20 years. I think there's a huge misconception out there that when you're leasing a car or a truck, you're just simply renting that car or truck, and that simply isn't true. That's why we have these lease buyout options. If you want to keep that truck for the long haul, you can buy it and keep it for however long you like. But one thing people forget to factor in is that when you buy out your lease, you're gonna have to pay taxes on the buyout amount. So in the case of this Toyota Tundra, you're gonna have to pay $40,363 plus tax. So make sure you factor in that tax before you determine whether or not you have enough positive equity. Now, options at 2, 3, 4, and 5 are all dependent on whether or not your particular car lease or your car leasing contract allows for third-party buyouts. And a third-party buyout essentially means you can sell that car, or you can exercise your right to sell that car to any dealership or any manufacturer out there. So in the case of this Toyota Tundra, if it allowed for third-party buyouts, I could sell the car to CarMax, Driveway.com, KBB.com, a Ford dealer, a GM dealer, a Chevy dealer, BMW dealer. I could sell it to anyone of my choosing. But if the leasing contract does not allow for third-party buyouts, then you're limited to selling it back to just Toyota dealerships. It doesn't have to be the same Toyota dealership that you bought the car from. It could be any Toyota dealership in your region, or for that matter, it could be any Toyota dealership dealership in the nation. And that leads me to option 2. Instead of buying the car, you can actually take the equity in your leased car and roll it forward into your next lease. So in this example, let's just say that my lease is coming to an end in a couple of weeks, and the local Toyota dealership is offering me $45,000 for this particular truck. Now that would mean that I have roughly $5,000 in positive equity. Now what I could do with that $5,000 is I could actually roll it into my next Toyota lease. I could use it as a down payment, or I could even just get a cashier's check from that Toyota dealership, take that cashier's check, deposit it into my checking account, and then work on a new Toyota lease deal from scratch. Because anytime you're doing trade-ins with leasing, it can get really confusing. So my recommendation actually would be to just take the check and then work your next deal separately. And the reason it could be beneficial to get another Toyota lease is because a lot of these manufacturers have returning lessee rebates. So if you already were leasing a Toyota and you're leasing another Toyota, they'll give you an additional discount, maybe $2,500, $1,500. And pretty much all the manufacturers do this. I mean, they're not, these promotions aren't, existent all of the time, but they are at certain times of the year. So that is one reason that, it makes sense to get another Toyota if you're leasing a Toyota. Now, option 3 is to do the same exact thing, but you could take your car to any dealership in your area. So let's just say that I want to lease a Honda Pilot now after I'm done with this Toyota Tundra. Well, since this lease allows for third-party buyouts, I mean, you need to double check that. I can just take that same equity, that $5,000, and put it towards my new Honda Pilot lease. And again, ladies and gentlemen, it doesn't have to be a Honda dealership. It could be a Ford dealer, a GM dealer, a Hyundai dealer, a Volvo dealer, any manufacturer of your choosing with whatever car you're planning on leasing next. Now, option 4 and 5 are actually pretty straightforward. They just consist of selling your car back to the dealership. Now, with option 4, if your lease doesn't allow for third-party buyouts, you're going to have to sell your car back to the dealership of the same manufacturer. So in the case of this Toyota Tundra, what I would do is I would go to every, Toyota dealership within my region, within a 100, 200 mile radius, and I would get offers on my Toyota Tundra. And whichever dealership offers me the highest price, let's say I have to drive 100 miles to get an offer of $47,000, well, I'm going to do that because me driving 100 or 200 miles just means I put $7,000 in my pocket. And the way this works is you take your car to the dealership. What they'll do is they're pretty much they will look over your car, they'll give it a full inspection, and then they'll give you an offer. And these offers are typically good for 7 to 10 days. So then what you do in between is you keep going to different dealers, and at the end of it, whichever dealer offers you the highest amount, that's who you sell your car to. And option 5 is pretty much the same thing, but now your dealer network has grown significantly because now you're not just limited to Toyota dealers. You could take it to any dealership that you want, and now you can actually sell your leased car to online dealers as well, like KBB.com, CarMax.com, Driveway.com. You've got Vroom, Carvana, some of these businesses. I don't know if they're still in business, but you can sell it to anyone. And you could take it to your local Ford dealer, your local Lincoln dealer, your local Jeep dealer, right? And that's going to give you a lot more options, and it's going to give you a greater chance of getting more money for your leased car. Now, ladies and gentlemen, I know that this can be confusing, so if you have any questions, just drop them in the comment section below, and I would be happy to help you out with your unique situation. But with that, I'm going to call it a video. Thank you all for watching. Financial knowledge is power. Please like and follow for more.